Greetings, my fellow wealth hackers. Welcome to another episode of the Truth About Real Estate Investing show. Today's show is titled Failing Grades, Fighting at School, but ended up graduating university in the top 10 in class and 11 properties at the age of 27 with Antonio Yong. Before we get to Antonio, though, I'd like to wish my wife happy anniversary. Her birthday is coming up, but right now it's happy anniversary. To my wonderful wife, Cherry Chan, who is my life and business and investment partner. It hasn't always been easy. I think most people know relationships are not easy, but they're oh so important for long-term happiness and success. One thing that's worked out well for us is we share so many values, including how we raise our kids. We both are planners and want to prepare them for all things. I tend to lean towards what I'm worried about for like 10 years from now when they're all grown up. For example, my kids are switching from martial arts later this summer, next month actually, from kickboxing to Brazilian Jiu-Jitsu. For anyone who's watched UFC, mixed martial arts, you know, those are pretty much the top two styles among that are the most important. It's almost interchangeable, which is more important, but my plan is for kids to have both. Hence, again, they're switching to Brazilian Jiu-Jitsu, which is, in my opinion, the most effective martial art for self-defense. Anyways, this week we signed up the kids for more golf lessons, as in my experience, golf is an important skill for business. It's funny, they don't teach that in business school. I think they should. Don't ever hire me to teach anything to business people. This is just my own experience. The networking opportunities from golfing are among the best I've seen, and even better for good golfers. Plus, it's an activity that takes a long time that we can do as a family. So I look forward to the kids, when they don't want to hang out with us and talk to us, that they'll, even when they get older, they'll open up to us because they'll be stuck with us for 4 hours. So they better talk to us while we're golfing. It's well known and documented that Tiger Woods' favorite memories of his dad were when it was just the two of them playing golf together. That's something that Cherry and I focus on, is building memories. Collecting things like houses is more of a means to an end. We teach our kids about that as well, to invest for the long term and provide us our financial freedoms, because as great as it is to be a business owner, we don't have pensions, and statistically those without pensions, it's over two-thirds of the folks without pensions will never retire, which is basically the opposite of financial freedom. Not what I'm looking for. Speaking of financial freedom, we have a young investor as today's guest, Antonio Yong. He's 27 years old and he's already owned 11 properties. He doesn't own them all currently, as he's rotating his capital from Ontario to Alberta. He's here to share about that, and also about his broken childhood, as he was the child of hardworking blue-collar immigrant parents. Both of his parents worked 60 hours a week just to put food on the table. His story of how he turned it around is full of lessons for anyone out there wanting to turn around their own fortunes, or for those of you who are parents with troubled teenagers. And did Antonio ever turn it around? He got around better folks. His parents switched schools and got him around better kids, where focus was more around academics versus violence. Antonio actually ended up graduating from a really good school, Laurier's business program, in the top 10 in his class, and he got top co-op placements, which are highly competitive, and great jobs and offerings after school. He's a student of some of the greatest investors out there: Warren Buffett, Ray Dalio. He's been in private equity for the Ontario Teachers Pension, learning from some of the best investors out there, and currently works for one of the big 5 Canadian banks on Bay Street. Like myself, Antonio is not loyal to real estate. He's an investor who happens to prefer real estate for highest returns and best investments. This is a pretty cool episode, in my opinion. It's been quite a journey for young Antonio. And if you know any troubled younger people, you may want to share this episode with them. Please enjoy the show. Hey everyone, sorry to interrupt the video, but I wanted to especially invite you to the biggest event of the year for entrepreneurs, investors, and anyone who's crazy about building wealth and living their best life, at the Wealth Hacker Conference. The Wealth Hacker Conference is an all-day in-person event live only, happening in Toronto this year, November 12th. We'll be learning all the best practices on building wealth from retiring early, including from top experts like 6-time best-selling author Derek Foster. He retired at 34. He's known as Canada's youngest retiree. We have the incredible Jesse Itzler, New York Times best-selling author of one of my favorite books, Living with a Seal. He's our keynote speaker, and he'll share his secrets on building a life resume to be proud of, plus all the hundreds of millions of dollars he's made. Plus tons and tons of other excellent speakers who have built financially free lives through real estate, stocks, crypto, and business. You do not want to miss this event. The links for the tickets are below. Hope to see you there. Hello, Antonio. What's keeping you busy these days?
Just work. Right now, what I'm doing is I just ran a marathon on May 1st. That was really, really tough for me. And then now my next fitness goal is I'm looking to get to 10% body fat. And so that's what I'm working on right now. And then I also have a business partner named Kathy Lay. And right now we're in progress of discussing with lawyers and different folks on how to build a REIT.
Fantastic. And you're going to do all this before breakfast?
That's a tough timeline, but I'll try.
All right, a lot to unpack there. Let the listener know, how old are you?
I am 27. I just turned 27 7 days ago.
And you have how many properties?
For me, I bought and acquired 11 properties. So I actually sold, it might be 12 properties. I sold 6 properties in the last 2 years. And then what I've been buying is over in Alberta. So I have 6 properties in total right now.
Awesome. And what's your strategy out in Alberta?
My strategy out in Alberta my strategy in Ontario was always the first strategy, because that makes more return than anything that I can ever find. In Alberta, it's a little bit trickier because I don't know contractors there. And working with contractors is the hardest piece, because managing them and then managing them from a distance is a little bit harder. So my strategy was just to buy under market valued properties that don't need too much renovations, and then really just rent them out because it cash flows in Edmonton.
That's pretty crazy. And sorry, when you're what kind of properties were you burning? Like single family homes, apartment buildings?
The properties I was burning was more so of duplexes. I had some triplexes.
Were they already duplexes and triplexes when you got them, or you turned them into duplexes?
I didn't turn them into. I was looking into that strategy actually in Kitchener, and then I was these numbers don't make sense anymore to do them. So mine was really just buy things, and then some I had to gut, and then some were just lipstick renovations.
Right.
My strategy was always, if I can buy low enough, there's value here. And sometimes you can even burr things without doing major renovations.
And that's actually a really good point that you bring up. And I think especially novices need to understand that to do a conversion is extremely expensive and time intensive. And also you have to go through government for it.
Yeah. Well, I was talking to a lot of novice investors, and I'm actually really scared because I'm going to these real estate networking events, and I'm asking them for their numbers, and I'm like, hey, why are you investing in this specific market? I'm not going to name the market.
Ontario?
Somewhere in Ontario, like in the suburbs.
Okay.
And like far out in the suburbs, and they were just
like how far? Like tertiary or like we're talking about like
5 hour or drive.
Oh my, okay.
You could probably guess it now, but I was asking them, I was like,
Sudbury?
I got you. Put the pieces together. I was asking them, I was like, what's the fundamentals there? What's the different thing? And they were kind of telling me, hey, I'm investing there because this person is investing there, and the numbers work and the cash flow. But in my mind, I'm like, but the fundamentals, like you got to invest based on fundamentals. They were telling me the numbers, and they were like, yeah, I'm going to buy this property for about 300K. I'm going to put 100K in renovations, and the ARV is going to be 375. I'm like, wait, so you're putting in all this money and you're actually going to lose money. It's like a negative PER, right? Because you're putting in 400K like all together, but the property is only worth 375. And that's when I got really, really scared. And I was like, I need to get out of Ontario and invest in Alberta.
Yeah, I know a lot of people who are struggling with their properties in Sudbury.
Yeah.
Like you mentioned, contractors, and then it's far away, so they're managing from distance.
Yeah.
So that's it's yeah. And you know what the funny thing is? So there's gonna be some people who are upset that we're talking about Sudbury and how people are losing money there.
Yeah.
This show is called "The Truth About Real Estate Investing." Hopefully, people understood that when they read the title of the show. We don't pull
Yeah.
punches.
I'll be transparent and stuff because I always desire the truth, because as an investor, it's like once we have the truth, we can figure out the optimal solution. So
Yeah,
that's why I really like the name "The Truth of Real Estate Investing."
yeah. Like this is kind of like a pocket mastermind that here we're just trying to share best practices and also what things that don't work, and so that people can learn from it and make their investments better, because there's a lot of crap investments out there, right? Yeah, it just made headlines that like Epic Alliance is, for those who don't know, there's a real estate group company that they completely collapsed, and surprise, surprise, one appraisal company was got almost all their business.
I was actually looking at their business in one of the conferences they were in, and
Yeah,
I was
yeah,
just like, they're offering me 15% returns, almost guaranteed.
yeah,
I was
yeah.
like,
Almost
oh,
guaranteed.
yeah,
Yeah,
almost guaranteed. And I was
yeah,
just like,
yeah,
oh, maybe I should invest with these guys.
yeah, yeah, yeah.
It seems so passive, but I'm glad I didn't. And I feel sorry for anyone that did, because I feel like there are some questionable people.
Yeah,
Um,
yeah. Yeah, the findings of the investigations have not been good, and I feel terrible for people. I understand some people put their life savings into it, so and that money's gone. Not only the 15% didn't happen, but that money's gone. Their investment's gone.
yeah, I just don't know what's going to happen with all those properties, because from my understanding, they owned a lot of properties in that market. And if
Mm-hmm.
they put that in a small market like or a smaller market like Saskatoon, because I
Mm-hmm.
believe that's where they are, it's
Mm-hmm.
going to flood the market and tank everything.
Right. So
Yeah.
you're smart. You actually look at fundamentals,
Yeah.
and not just what other people are doing.
I show you a book for my idol is actually Warren Buffett. So I've read like all the shareholder letters of Warren Buffett when I was in university,
Uh-huh.
and that's where I learned how to invest. And recently, because things have been dropping, I
Yeah.
needed to educate my mind again and read all his shareholders again. So there's this thing called the Essays of Warren Buffett, and it's all his shareholder letters in here. And you can read it and see how one of the smartest investors of our time thought.
So what's he writing about? Is he writing about, is it more theory? Because I thought I would think that more shareholders reports, it's more like tactical for that time. It'd be more time sensitive stuff, or is that what he's writing more evergreen?
It's more so of he's writing for like every year.
Mm-hmm.
So it based on, hey, what he's seeing from those years. And
Mm-hmm.
Warren Buffett, is the thing with him is he will invest where the returns make the most sense. There's a period of time when Warren Buffett was like, I can't outperform the market. I'm just going to invest in bonds. Yeah. Eh, because bonds were giving like 10 to at least, I think 10 to 12%.
Yes, please.
Yeah. So he's like, I'll buy these all day. So the thing is, because even though it was like written about that time and that specific period,
Sorry, do you remember the year? Do you remember the year he was talking about? 10%, 10, 11% on
oh, it must
bonds.
have been the 1980s,
Yeah.
because I think Fed fund rate was like 22% in the
Right,
US
right,
around that time.
right. And you raised something important. Like, to me, I'm agnostic to investing. Like people
Yeah.
think I'm just a real estate bull. No, I will do what will make me the most money. Right.
Yeah.
That's where my money flows.
Yeah.
If bonds were paying today 11, 12%, you better imagine I'd have a bunch of it.
Yeah. Yeah.
As long as our
That's
interest
the
rates weren't
thing with,
continuing to go up. Right?
yeah. And Aaron, I think that's the thing that a lot of real estate investors don't understand is like, they're like, hey, real estate, my uncle or someone told me that real estate is the best asset class. And
Mm,
sometimes people are just keep buying and buying and buying.
yeah.
But like you said, if bonds return 10 or 12%,
Yeah, basically risk free.
Yeah, exactly. And
Risk
real
free as you
estate
can
with
get.
interest rates that high might not be the best investment at that time.
Yeah, yeah.
Yeah,
No, exactly. I definitely want to have some because then I get some cash flow.
yeah,
No, it's fascinating. So, Antonio, you have an interesting background. Like, I don't know how to say it, but I'll say it. You're Chinese, but your name's Antonio. but
yeah,
you're Peruvian.
yeah,
This is complicated, man.
yeah. I always tell people, I'm like, I have the opportunity to learn the three most spoken languages in
Yeah,
the world:
yeah,
English,
love it.
Spanish, and Mandarin. And I
Yeah,
was like, I barely know English. And the other two, like, you could probably, like, anyone could probably speak more than me in the other ones.
Oh, so your parents speak Mandarin as well?
My parents were born in Guangzhou in China, so for
Hmm.
them is they speak Cantonese, but they
Yeah,
also
yeah, yeah.
speak Mandarin.
Oh, okay,
So they
okay,
speak
okay.
both.
Okay. For folks who don't know, Guangzhou is part of southern China, and southern China is generally Cantonese speaking. But yeah, if you want to get further ahead in life, speaking Mandarin is important. But yeah, sorry, continue. And so wait, how'd they end up in Peru? It's pretty far apart, China and
Yeah.
Peru.
So I think at that time, my mom and my dad, all their parents were like, you need to get out of China because it's communist. Even if you build something for yourself, like, it can be taken away at any time. So what they were seeking was freedom. So for them, it was just like they had some relatives over in Peru. So they flew over to Peru. And I don't know if that was much better because once they, like in Peru, they opened up a restaurant and they didn't make money off of the restaurant. And there was a lot of robberies in Peru. So people would go into your restaurant, rob you. And then I remember my mom calling the cops, or she was telling me she was calling the cops. And then once you call the cops actually come in and they rob you as well, and they don't do anything. So in Peru, it was actually like a tighter community. So it's like you bond together with all your neighbors and everything so that
Jeez,
they help you out instead of the police enforcement.
that's crazy.
Yeah.
I have a friend who's Peruvian, and he was explaining to me their gun culture because it is so high, crime is so high. I believe he told me that gun ownership among private citizens, not only like gun ownership, but concealed gun ownership was like among the highest in the world
Yeah.
for self protection.
Yeah. Well, if the cops are not protecting you, you need something for self.
Yeah,
Yeah.
well, he told me his mom carried a gun in her purse.
Yeah.
Right?
It was a scary time there. I had a lot of cousins in Peru and they lived there for until they were like 16 to 18. And yeah, when they got here, they look like thugs. They're not like that anymore, but yeah, it's
Well,
crazy.
they, they stick out like a sore thumb in a dangerous environment, high crime.
Yeah.
Right. So you came to Canada, and but I've heard all these bad things about Canada lately that we're turning into communists and
Yeah.
loss of freedom. So you're gonna go back to Peru now, right?
I do have my citizenship there, so I have Canada and Peru.
Mhm,
So I
mhm.
just need to renew and I can go back over there. Or I don't know exactly how that works because in my mind, I'm like, if I was born there, I should be able to get back.
Do you want to go back?
Uh, there's a lot of corruption there, but I want to go because they tell me that the food is really good, and I want to go to Machu Picchu, but not to live there.
That's badass. You run marathons. You're in probably good enough shape to do it. Then you can do the hike. You can do the Inca Trail.
Yeah, I
Because
don't
I
know about
understand.
that trail, but yeah,
I've heard that if you're not in good shape, it's much tougher uh,
yeah,
to do the Machu Picchu. That's cool. And then your parents are in Canada now.
yeah. They're in Canada. They've been here for about 25 years, 26 years actually now, and yeah, they don't speak a lick of English. So
Wow, that's
yeah,
cool. Where do they live?
they live in Scarborough.
That's where we grew up as well. That's where we started
We're
in
specific.
Ontario. Shepherd and East Side. Forget exactly.
Shepherd. Okay.
Yeah,
I'm
not a
on
good area. We
I'm on
lived near
like
government
Brimley and
housing.
Finch.
Sorry, Brimley and Fringe.
Yeah.
We weren't far from you. We were my dad's office was Brimley and Shepherd.
Okay.
Yeah, and
Okay.
but you know how it is. Like when like our parents didn't have guidance on where to buy. So our first home was next to a lot of high rise government housing. Yeah,
Oh,
yeah. So my brother got jacked for his Optimus Prime,
yeah.
and and the school wouldn't do anything about it. So
I,
so we moved. We moved
I've
to
got
Markham.
mugged a couple of times over in Scarborough too, so
Crazy man.
yeah. So good thing you moved away from here.
Hopefully, no one pulled a gun on you.
Someone did pull a knife, not a gun though.
I prefer the knife or the gun. So it sounds like it's an improvement over Peru.
Yeah. Well, if they didn't have a knife or a gun, I'd be like, okay, we'll fight for it. But the moment they pull out a weapon, I'm like, okay, I know who's the boss. Here's my money.
How much money are we talking?
Well, like that was when I was in grade 11, and the robbers were smart here. They're like, okay, the people have Chinese New Year's, and you get red pockets for Chinese New Year's.
Yeah, yeah.
So I'm carrying cash around, so they're specifically targeting Chinese people for Chinese New Year's.
Right.
And I had
Asian hate.
about
Yeah.
$150 in grade 11 at that time, and I was like, that's a lot of money,
Yeah.
right? And yeah, in my mind, I was contemplated: do I fight these guys for it or not? Um, yeah.
So you got into a bunch of fights. God, I gotta call my dad after this and tell him thank God we moved out of Scarborough.
I wasn't actually in Scarborough when I was younger, though. I was in near Woodbine Station.
Sorry, Woodbine. Which station?
Woodbine Station. I was close to there. It was probably like a 15-minute walk around there.
Okay. Is that
Yeah.
near the mall? Is that near Woodbine Mall? Like near the horse
Mm,
track? Is that a horse track?
no, not
Okay.
near there. Yeah.
Okay. But yeah, so you wrote in before we did this call. So you didn't have the easiest childhood.
No.
What happened?
Well, it was just like I'm sure if you can relate for like immigrants, it's just like your parents are working all the time in order to survive. And then for me, it was just like running around as like a little kid, no one to guide me or figure anything out.
Hmm.
And a lot of times I'd be wearing like hand-me-down clothes with like holes, and like I remember I was wearing like boots that were for females, and it got made fun of for that. So for me, it was just like I was really like reserved, and I didn't want to talk to people because I was like, hey, I'm being made fun of all the time.
Hmm.
Like I'm just gonna do my own thing. And then afterwards, I didn't know my ABCs until like grade 2. And every time people would go around and sing their ABCs, I'd be like A, B, C, D, and then I'd mumble the rest. But I'd be so embarrassed that every time that song came up, I just like sent shivers down my spine where, like if a teacher calls on you and then you
Hmm.
don't know the answer, that was the feeling that I got.
Hmm.
And for me, it was just like, feel like I was scared all the time because it was just like, man, people are like geniuses out here. Like, how do they know their ABCs? How do they know how to behave as a human being? So I was thrown into ESL, and when you're thrown into ESL, you're like your English is your second language, which it
Yeah.
was mine. For there it was
Sorry,
just
just to
like,
clarify for folks, because I went to ESL too. So, just to
okay,
clarify for the listener, for people who spoke English as a second language, public schools. Well, my experience, public schools had separate programming for folks who didn't speak English that well. So it's extra schooling that we had to do. So yeah, sorry. Continue, Antonio.
yeah. So for when I was put into these ESL programs, you're actually labeled by the other kids, where they're like, oh, that guy's weird. He doesn't speak English. He's part of another program.
Hmm.
And so for me, I was just like, I wanted to excel in something, right? Because I was like, I'm doing terribly at school. So what I found out was like, I'm stronger and I'm faster than most of these kids. So what I started to do was when people made fun of me, I started punching them in the face. And I was like,
Shit.
cool, this is a much cooler experience. Like, this is much better than trying to learn math and English and geography and things, because I was like, that's not relevant. It's like, it's not going to get me ahead in life or anything. So at a very young age, I just started punching people in the face. And then our school we weren't in the best school. We were probably ranked, like if you ranked EQAO score, like there was probably 1,370 schools. We were ranked as 1,340. So we were like the lowest ranked school. And because since we were grade 1 to 5, we didn't get a lot of fundings. So you'd get a lot of problem children in this neighborhood. So
Right.
all of us was like,
And and the good teachers probably don't want to work there.
yeah. So we were just like punching each other in the face, which was just like, that was cool. It was just like no one really cared. No one said anything. And then it's just like we'd like everyone wanted to fight each other. And
Mhm.
so we tried to fight to see who was the top. And then if you beat up the wrong person, their brother's like 2 or 3 years older, they'd come after you. So although I punched people in the face, I also got my ass kicked. Um, yeah, and that was from grade 1 to 6.
So when did this turn around? Because you had
This
other
turned
difficulties.
around,
Like for example,
and
you mentioned in your bio that you got lost in gaming.
yeah, this turned around, which was really good for me, was in grade 7 when we actually moved up to Scarborough. Because what happened was our school was 1 to 5, so we got into we started to merge schools, and when you have kids that are just problem children, there's another rise to top. So you had grade 6 and 7s, like they started carrying weapons, because they like if you couldn't beat someone up, you'd have to use like a tool. So
We're talking
then
about
for
11
me,
and 12-year-olds.
yeah. So then for me, it was just like, this is getting scary. But at the time, I didn't know. It was just like, as a kid, you're like, oh, we're just playing. Like, that's what we thought. And so afterwards, I moved over and I heard afterwards, like, my 3 closest friends, one became a drug dealer, one got a national arrest warrant for murdering someone, and then the other one became like a teenage dad. So those were my 3 closest friends. Um, and after I moved here, like we're in a school which was predominantly Asian. And so the cool thing to do here was to study. Um, and so for me, I was just like, if I was a very angry child, so if someone looked at me the wrong way, I was just like, okay, I'm gonna beat this guy up. But quickly, if you try to beat someone up or you hit someone, you just get detention, or you'd you'd be labeled as, oh, this person's that angry kid, that weird problem child. So that no longer became cool. And then because I was so far behind on my studies, I was just like, okay, I gotta excel in something again. So I shifted towards video games. And I played this game called Maplestory, which taught a lot about entrepreneurship.
What? Oh,
Yeah,
what's this called? Hang on. What's it called? I
it
gotta
was
Google
called
this.
Maplestory.
Maples. I've never heard of it.
Yeah, it's like an online PC game, and it's kind of like, you can think of it as like World of Warcraft, where there's its own economy, its own different thing, and it's like its own little world. Yeah, it was a very popular game at my time. But
Okay,
you
the
could buy
description.
things for high, sell them. You could buy things for low and sell them for high, which was a really useful skill that I learned.
Wait. Is this actually like a good learning tool?
It was a
Okay,
great
so
learning
this is the
tool for me.
description on the website. Like,
Yeah,
live it up in Maplestory, the original side-scrolling. That's an acronym. I don't know what it means. MMORPG.
yeah.
What is an MMORPG?
I used to know what it was. I can't remember. Um, it was like multiplayer role playing game.
Is this actually a good tool? Like, would you recommend it to like your kid nephews and nieces to do this to learn about life and money?
Uh,
I see cartoon characters walking around with humongous swords.
I think this game actually taught me a lot because it was just like, you can imagine that you're living life, but you're in like a virtual world, right?
Yeah.
But you still want to get to the top. You want the best items, you want the best tools, you want
Right.
to kill the big bosses and stuff. So if you were competitive in the game, you
Yeah.
had to figure out strategies in different ways in order to get there. So it's very
Could the
similar.
problem solve, right?
Yeah. So
Very I don't know if it's underrated, but I'll just say it. I believe it's a very underrated skill is to be able to
yeah,
problem solve. Sorry,
yeah.
continue.
So I would recommend it to people that to play these role-playing games rather than the shooting games that we have, because in shooting games there's literally nothing you learn except for how to shoot people. But this game was just like it had its own economy and everything there. So I really enjoyed it. It's not as popular now, but it was one of the top games back in the days.
So it had its own economy, as in like you could start a business or you'd find stuff and sell it. Like
Yeah, yeah, you could sell anything. The objective was you kill monsters in the game.
yeah, yeah.
These monsters would drop weapons and loot, and then you would try to get the best items and everything and level
Mm-hmm.
up and
Mm-hmm.
things. It was just like kind of like life, where it's just like you level up your fitness, your
Mm-hmm.
mindset,
Mm-hmm.
your wealth, spiritual, all of these different things, but they're just different stats.
Right, right, right. I'll just add to that. I don't think generally I keep video games away from my kids because I don't think there's that many redeeming qualities. But those like things like those games that teach you to grind,
Yeah,
right? I think that's a redeeming quality to understand that the more you grind, the more
yeah,
returns you get,
yeah.
right?
I actually, for me, I felt like I actually learned more out of that game than in school, because school didn't really teach much relevant things. And then for me, it was just like
You
I
did go to
was
a bad
there.
school.
Yeah, I was there, and like 6 a.m. I'd start waking up and start grinding all the way to 12. And for me, I kept trying to think of ways to accelerate and improve. So there were millions of people playing this game.
Mhm.
But I had ranked to one of the top players in like the server just because I was grinding so hard.
Interesting.
Yeah.
Did you find ways to be more efficient?
Yes. Because there was just like there's different ways where you're just like, how do you kill a boss, right? How do you make alliances with different people so that you can take down monsters together? What's the best weapons and different things that cost the least amount of money? Um, and so once you figure out all these small tips and things, you can put them all together and you can have a massive advantage over others.
Hmm. Hmm. Now, my concern with video games is also I've seen too many young people, they fail to progress to the next step. They get lost in the games.
Yeah.
How did you avoid that?
It's like the modern day drug. So for me, I was playing from grade 7 all the way till grade 11, and I was addicted. Um, and so for me, how I started to get away from it was I knew in the back of my mind, I was just like, this is not, I'm not going to be successful doing this. And because for me, there was something always in the back of my mind where I was like, I need to be wealthy, because I saw my parents and I was like, these guys are working all the time. Like they had no time for me. I don't blame them, because I probably would have done the same thing. Um, and then I was like, I want to be there for my kids. I want to be there so I can take them to soccer practice, teach them, and do other things. So I was like, I need to get wealthy. So I started to opt out of Maplestory and rebuild myself, where I was just like, now I want to play the game of life. And so that's when I started looking into, okay, what's the formula that is going to make me successful? So I
Mhm.
listened to my parents. I'm like, start working really hard in school, get a good job, and then save money, and eventually you'll have a good life. So that's the formula, the only formula I knew, and that's the formula that I followed.
And this is what changed because those things that the things your parents taught you don't get you to 11 properties.
Yeah. So for me, it was just like I started to grind harder in grade 11 and 12 for school, because I was so far behind in everyone, because I just never did homework or anything. So then I started to grind harder, and I was just like, okay, I'm actually good at school. I can do things and different things in school.
Hmm.
So then for me, I started to get good grades. And I was like, oh, this is actually possible. And so for there is actually, I went to a school where Laurier for business, that one of my friends were going to. And before I was actually, I didn't want to go to university because I did a calculation where I was like, hey, I'm going to make more money as an electrician than going to university.
Yes.
And so my friend was like, hey, I'm going to university. It's good to go to university. Why don't you come with me? So I went to the same university as him. And then afterwards, I was just like, okay, I'm going to change my life because I'm in a new place now. I'm no longer at home and I'm with all these new people. So for me, I just worked really hard in school. And
So
then
hang on, sorry, 1 second, Antonio. Did you have a mentor at this time, or this is all just you talking to yourself?
it's just all me talking to myself.
Okay.
I didn't read a single book until second year university, like a single real book, like a self-development or something like that.
Okay.
And for me, it's just like, I feel like,
dude, you know how lucky you are?
I'm very lucky. I know I'm incredibly lucky.
Most people have not gone down the right path.
Yeah. I think for me, I was an overly energetic kid. So for all my relatives and all my family and stuff, they never saw anything in me. They were just like, oh, this guy's a troublemaker. He's going to be like a gangster one day. I was banned from all my uncles and aunts' house because every time we go to their house, we'd break stuff because we had cousins that were like 10 years older than us. And we just like, oh, I want to take him down. If I take him down, I'm going to get better at fighting, which is applicable to my fighting in school.
Right.
So that was practice for me. And you can never beat them, even if you had like 5 kids on them. But if you rally 5 kids, things will break. So for me, like no one ever saw anything in me. It was just like me, this troubled kid that was playing video games all the time.
Your marks must have been good because you got into Laurier Co-op, which is not an easy program to get into.
Yeah. Yeah, for me, it was just like I was hanging around the right crowd of people where my friends, they ended up getting into med school and some of the hardest programs in university. So at that point,
these are the friends that you went to Laurier with, like from high school to Laurier, or people you
no,
met at
this was
Laurier?
from high school when I was getting my act back together because I was so far behind in school. So a lot of them were actually tutoring me. And so for me, it was like,
for free?
okay,
That's out of the kindness of their heart?
yeah, it's
You know
just
how
like
lucky you are?
we played Maplestory together. So I'd help them in the game and then they'd help me in school. That was the trade-off. And yeah, for me, it was just like I didn't have much family that knew what they were doing, but I had really good friends that put me in the right path.
And these really good friends followed you well, you had really good friends in Laurier because you did incredibly well in school, it seems.
Yeah, there was one friend that actually applied to university for me because he's like, Antonio, let's go to the same school. And I was like, I want to be an electrician. I don't want to apply for things. So he applied for university for me. We got into Laurier together, and he's a really hard worker, which I always admired. And he was also very intelligent as well. So together we were just like, hey, let's do really well in school together. So we just, both of us actually graduated near the top of our class. I graduated at the top in finance in my class amongst 330 people.
So what's that mean, like top 10% or top?
So there was I graduated top of finance in my class, but I graduated the top 10 within 330 people. So top for finance, I didn't know how many people there were in finance, but I'd say top 3% then.
So you're a smart guy. What got you and your co-op placement, you told me, was because you said private equity before we're recording.
Yeah.
Which is usually a highly touted spot.
Yeah.
What did you learn? What did you learn from being in private equity?
So I actually had the opportunity to work in one of the top private equity shops in Toronto, which was in there. And what I learned was these guys made the same returns as Warren Buffett, which was one of the people
Wait,
that
wait, wait,
was,
what do you mean? They take on a bunch of risk. Like private
yeah.
equity is very different than what Warren Buffett buys.
But the thing is, the return was Warren Buffett's return all time was around 20% year over year. And then this firm was also 20% return year over year. So incredibly smart people. And then they were buying in private equity. You don't buy like things on the S&P 500 or the stock market. You buy private deals.
Yeah.
So what they do is they buy a distressed company where they feel like they can add value to it, and then they actually go into this company, fix it out with consultants or anyone that they hire, lay off any of the excess they can, and then they either refinance or sell this business or keep it in their portfolio. It's very similar to real estate in the BRRRR strategy, where you buy a under market value, you generate the value in that property whichever way, like evicting tenants or doing strategic renovations, and then you can refinance it, sell it, or hold it. So exact same model. And the BRRRR strategy was actually the most basic form of the private equity model, and it was actually taken from the private equity firms.
So before we go into more real estate, even a fresh grad in private equity usually makes quite a bit of money.
Yeah.
Can you share with the listener what kind of range that would be for entry level at a private equity firm?
So usually you can't get into private equity right out of graduation. And the thing was, even if I had graduated, I'd have to go into investment banking. So all of the people that I worked with actually went into investment banking over in the States. But typically what they would make would be around 100 to 150K.
US.
Yeah.
And how many hours do they have to work a week?
70 on the best possible week. If there's like live deals or they're doing a lot of work, they're probably clocking close to 95 to 100 hours.
That's not much, right?
Not much when you account for the hours you have to work.
So is that the path you went? What did you do then out of university? Where'd you go for work?
So for me, I actually worked in a new department of RBC, where it's more so of like venture capital. And so at the time, it was this new department where there was only 30 people, and now there's more than 400 people. But yeah, I ended up going over there.
And how's that working out?
It's working out really well. I got promoted to senior manager this year. And so now I'm leading the operations of one of the partnerships for a prop tech company.
So prop tech meaning it's a real estate based technology.
Yeah, it's like kind of like House Sigma, but we're not ranked as high as them yet. But the plan is we will be.
Cool. House Sigma is pretty popular.
Yeah.
Oh, fantastic. And so tell us about tell us what you're doing investing wise now. So you said your focus is on Alberta. Which city? Yeah. Which cities?
Edmonton.
You friends with Russell Westcott?
No, I actually don't know who he is.
What?
Yeah. You know all the heavy hitters. I know all the people that are starting off.
Who would you rather know? Who would you rather know?
I'd rather know. I'd rather know both. Well, right. Because I like giving back to like the younger investors and stuff, and anyone that has hustle.
There's investors younger than you? You're 27, bro.
The newer investors. The newer investors.
Okay. So they can be like 45, but they're new to investing.
Yeah. So if they ever ask me and they reach out on Instagram and I see the hustle, I actually groom them through the cycle without any cost. And I probably shouldn't say that. So now people are going to reach out to me.
What's your Instagram? Where can people find you?
So it's A and then YOUNG. ONG. So it's Young, the word Young, and then money, and then underscore.
Why do you need the underscore? Was there already a
Actually,
Young Money?
I'm actually really stupid. So I actually created an Instagram account. I lost the password for that, so I couldn't
Oh,
create the name A Young Money anymore, and then I had to
got
put
it.
an underscore. Yeah.
Okay, so you're because that's a common practice for like scamming accounts is to just
Oh
to tweak
no.
something, right? But you had to tweak
Yeah.
something because you couldn't get your account back.
Yeah. You should probably change it so people don't think I'm a scammer.
So a young money underscore,
Yeah.
and young is spelled like young as in young in age.
Yeah. And it's a play on words because my last name is like Yong. So it's Yong. So I changed it to Young.
So what are you doing in Edmonton? Single
Um,
family
so,
still? Single family
so
burrs?
what I was, my intention of going to Edmonton was we actually were raising capital. So we actually had committed capital.
Hmm.
And the idea was I flew out there um, this year in March and I stayed there for about 2 months.
Hmm.
And I was walking through multifamilies. So we were looking to acquire things from 15 units all the way to 30 units. But the thing is, we just couldn't make the numbers work on a lot of these deals, even though it was Edmonton. Like commercial realtors would tell us it's a 6 cap. I'd run the numbers and I'm like, this is a 4 cap. And
What? Numbers don't jive? You
yeah,
must
and
jest.
I was like, okay, well, these don't work, but we have
Hmm.
committed capital.
Hmm.
And Kathy and I, a business partner, we don't want to close on a bad deal.
Hmm.
So even though I spent 2 months over there, I flew back empty-handed with no multifamily buildings.
Hey,
Um,
choosing no deal is still a decision. There's nothing wrong with that.
yeah. So we ended up, what we found out was the duplexes and the fourplexes,
Hmm.
the cap rates or the returns on those was so much better than these multifamilies.
Hmm.
And the misconception people make is like, hey, multifamilies, you get higher returns and stuff. That's not the
Right.
case. You can make much higher return on your money for like smaller like assets. Like it's easier to double your money if you have $1, right? It's harder to double your money if you have $1 billion, right? So the higher level you go, you actually work with more sophisticated people, right? So then the returns actually become less.
Antonio, do you know Jason Mattern? If you
I
don't, I'm
don't.
gonna connect you. Okay, I'm gonna connect you after this.
I would appreciate that.
He's my realtor friend in Edmonton, so he does lots of duplex, fourplex, sixplex, eightplex, new construction. So
Yeah,
it's a very to me it sounds like a brilliant model because I'd be doing that here if I could do new construction, small multis. I'd
yeah,
do it all day. It's all
yeah,
land based.
yeah.
So
Well, I actually bought about 4 properties over there while I
mhm,
was there. Came
mhm,
empty-handed with multis, but I was like, hey, these smaller multis actually make a ton of sense. So
mhm.
I bought four properties there. So I was like, I gotta leave with something.
Right. Well, are
Yeah.
these properties part of the REIT or the REIT something completely separate?
The REIT is something that it's still early days, but Kathy and I are talking about, where it's
Hmm.
just like we want to do bigger things because
Hmm.
happens is we can generate like 1,000% or an infinite return on, I mean, like these small burr properties, but compounding like $1, right? In the grand scheme of things, if that goes up 10,000%, that's still not material. But if we can do bigger things, the absolute dollar amount is actually more, and it's a material impact on our
Hmm.
wealth.
Hmm. Pretty cool. Oh, I
Yeah,
wanted to ask so not a lot of people who go to school for business end up in real estate.
yeah.
How did you find your way to real estate?
Well, it was just like I was telling you before, and I was following the formula where I was like, hey, do really
Burr?
well in school,
Oh
get a
yeah,
good
yeah.
job,
Yeah.
and you're gonna be wealthy, you're gonna make it, like people are gonna love you afterwards. And so for me, I was just like, okay, I'm doing the getting the good marks, I'm doing the getting the good jobs. And I was finally there and I started computing on like Excel sheet, hey, when am I gonna be wealthy and stuff? And the answer was just like too long, like 50s or 60s. And I was like, I don't want to wait that long. And so there was a period of time where it's just like my reality and expectations just like shattered. And I was sitting at home and I felt really depressed at that time. So I was just like, I was just like, I don't know what to do with life or anything. Because it was just like the game plan I was following was not the right game plan.
Mm-hmm.
So it was like I was following a map of Toronto, but I was in New York. And so for me, it shattered to break that into reality. So after 3 months of being sad, I just went like, how do I become wealthy? And the book that came out, Rich Dad Poor Dad. I read that book in a
Who
day.
gave it to you? Who gave it to you?
I just searched it on the internet and bought it.
What do you mean? What did you search? You searched Rich Dad Poor Dad, or did you search what?
I researched how to become wealthy. And the main recommended book was Rich Dad Poor Dad. And so I was like, okay, let me buy this book. And at the time I was just like, anyone in, like, I had a negative perception of real estate where you're like talking about flippers and, you know, people talking about zero money down on things. I was just like, oh, this is just like all scammers. But once I understand the industry, I was just like, man, this generates higher returns than anything that I've ever seen before.
Mm-hmm. Mm-hmm.
Yeah. And then so after that, I started reaching out to everyone I knew about real estate. Most people in the GTA were investing in condos. And I was like, this is not what, you're not buying land, and you're not buying, like, you're not, like, this is negative cash flow, $300-400 a month. So for me, I was just like, I'm trying to help these guys with their portfolios.
Oh, don't argue with these people.
When you're like a 21-year-old trying to argue with people, they're just like, dude, this guy's crazy. Like, get out of
Look
my
at how much money I'm making
yeah.
with my condo.
Yeah. They're like, get out of my face. And then so for me, I was just like, okay, who else do I know about real estate? And I was giving up because I talked to like 5 people, went to lunch and dinner with them, and I was just like, well, if I buy this, I'm just going to be working even harder at my job. And so I went over to Kitchener with a guy that I had night classes with, and he was 7 years older than me. And I'll never forget this guy, his kindness, because he had 3 or 4 properties at the time. And for me, I was talking to him about real estate, and it's like, I want to get in and different things, but I don't have money right now, like, and different things. And he's like, hey, Antonio, we can do a deal together.
Mm-hmm.
Right. And I was like, how? I only have 15K. And he's like, listen, I have another friend that we can loop in. He's interested in real estate as well. And we could put a 5% down on a house with some renovations, and we'll split it 3 ways. It will only be like, it'll work. And I was just like, what? But like, what value do I bring to this guy? I'm like, I don't live in Kitchener or Cambridge at that time.
Mm-hmm.
And I still don't, because it's an hour drive away from me. He does. Mm-hmm. He knows real estate, and he has the money to do it all himself.
Mm-hmm.
And I was just like, what? I don't bring any value. So in my head,
not much money either.
Mine, yeah. I was just like, this guy's scamming me. And so, but I believed in his character because I had followed his journey for so long that I was like, this person is a kind person. And for me, I went with my gut, where I was just like, if I lose everything, like, I could probably make it back, right? And it would be like a lesson learned. So we bought a place in Cambridge together, and this was a duplex.
Mm-hmm.
And we split it three ways, and that was the greatest learning experience of my thing, because I pulled the trigger. And even though the closing date was thing, I still had the logical mind where it's just like, I don't understand all these things and I was just like, I told them, I was like, I want to back out of this deal because I was getting cold feet. And they're like, listen, Antonio, like, this is a really good deal. We're blessing you with this. Okay, just stay in this. Like, we'll hold your hand, we'll guide you through it. And at that time, I was just like, okay. And then we bought the property, and then 6 months afterwards, I was still having cold feet. I was like, I was like, oh my God, these guys, I don't really know them. Why are they helping me out? But afterwards, like, he was my first mentor, and honestly, one of the people that I like always go and chat with him, and anything he ever needs, I'm there for him.
You want to shout them out?
Dan Fotopoulos, that's his name.
I don't know, Dan. Can you spell his last name?
Fotopoulos.
Those impossible Greek names.
It took me a long time to pronounce it.
And so how this duplex, you said, right? How did it work out?
It worked out well. We actually Airbnb'd the front, and crazy, we Airbnb'd something 5 years ago.
Mm-hmm.
And then afterwards, we had a grandma in the back, and we didn't have the heart to kick her out. And so we just kept her there, and we said, hey, we're going to Airbnb the front. Are you okay with it? She was okay with it. So we actually, this place was really close to the Cambridge Mill, which a lot of people go to for their wedding.
Mm-hmm.
And so then we had a lot of guests from the US and different things come into our Airbnb, and we actually did really, really well. But the thing was, we didn't understand the optimization or anything for this Airbnb. So every year it was just like there was more and more competition for Airbnbs. So the first year we made 3x of our rent. Then the second year we made 2x of our rent. And then the third year was just like, hey, long-term rental makes the same amount of money because we weren't improving. We didn't have the mindset to scale it into a business. So yeah, and we ended up selling the place too.
How long did you hold it?
We held it for about 4 years.
Could you share? Actually, I usually ask my guests about their numbers on their first deal. Do you know them?
Yeah, I don't know the numbers for this one.
What'd you pay for it?
We paid about $320 for it.
What did you rent it for?
We rented it for rent's a little bit hard because
did you Airbnb
we
part of it?
Yeah. So in the other unit, we rented it out about for $1K. And then to the grandma, and then the front was, we made like 4.5K for Airbnb, and long-term rent would have been like 1.5.
So 3x to Airbnb.
Yeah.
And who managed the Airbnb? Because that's work.
One of my other partners, his name was Tyler, and he's a realtor, and so he got his VA to manage it for us.
Yeah, but you still have to go in and clean and stuff.
We got a cleaner to clean for it.
Got it. And the VA coordinated all that.
Yeah.
Fantastic. And then what'd you sell it for?
We sold it for $685.
Oh my God.
Yeah.
So what was your return?
We had a very high return on that because we only invested about, I think in total, we probably each one of us invested about like 16K. Initially, we invested 12, and then we spent some money on maintenance and buying furniture. Yeah.
So you invested 16K each.
Yeah.
So it's 48K.
Yeah.
For an over 300 grand return.
Yeah, we did well on that one.
Why sell? Because you wanted to turn money over?
Our partners were in different stages of their life. And then we also didn't believe in the Ontario market anymore.
Oh, sorry. Was this recent that you sold it?
Yeah, so we sold it last year.
Okay.
Yeah. Returns look great on paper, but if you consider the market going up all those years that we've held it.
Yeah. It's a good time to own real estate.
Yeah.
Okay, so can you share what your numbers are looking like in Edmonton?
Yeah, I can share the most recent project that we bought.
Yeah, tell us about it. It's in Edmonton. Can you name the neighborhood?
Yeah, so this was Summer Leah. So this is, I
Is
would
it kind
say
of
a B.
Summerlee? Summer Leah?
Yeah, Summer Leah. So Summer and then Leah, Lea.
One word?
Yeah,
Okay. Summer Leah in Edmonton.
yeah,
Apologies to the Edmonton investors on this for mispronouncing. No hate. We love everyone. All right.
yeah,
Sorry. Summer Leah. Edmonton, Ontario, and Edmonton, Canada.
yeah.
What kind of house? What kind of property is it?
This one was, and I'm not gonna know the numbers as well as my partner on this one,
Sure.
because this one was actually I was guiding someone um, where they wanted to get into real estate, and then they were like, I gave them a really good deal where it was just like, hey, I don't have time to get into the real estate because I'm working full time and I'm doing a ton of things. I was
Mm-hmm.
like, I'm willing to contribute half the capital, and you
Mm-hmm.
contribute half the capital. If you're willing to contribute the work, I'll guide you through the deal. And
Who's getting the
so
mortgage?
he was getting the mortgage. But I know the number is very high level.
Got it.
It's so we bought it for about 370,000, and this is a duplex.
How old is it? How old's the construction of the home?
So this is built 1982,
1982.
so about 40 years. Yeah,
Is this a bungalow or it's like a side by side duplex?
it's a up and down duplex.
Okay.
Yeah.
So okay. And high level numbers, rents.
Current rents are we're renting the top for about 1750, and then
And
the bottom we're renting. The tenant just moved, but before previously she was renting for 1200.
those are pretty good numbers.
Yeah, but this place is we would say that it was a kind of like a unicorn deal.
Okay.
Yeah, because what happened was I think the seller needed to sell this place, so he
Mhm.
listed it on the market, and his offer date was actually April 14th, which was right after the interest rate announcement of 50 basis points. Um,
So sorry, hang on. You have to understand a lot of people don't pay attention to what's going on in the world or economics. So
yeah,
yes, these things happen.
yeah. So
I do. So I'm really picky on timing. So sorry,
yeah,
continue. April 14th, right after
April
interest rate
14th, and
announcement, which was
I
like
told
anyone who pays attention knew the market would go soft that day.
yeah, yeah. And so what happened was these guys listed it extremely low, so we knew they needed to sell it, right? And it wasn't like people were listing their stuff for extremely low in Edmonton. It wasn't like Ontario, it was more of a balanced market. So the property the comps we got to was this property was worth 430,000. That's what we arrived at for our comps, and our realtor told us that. This was actually a really good neighborhood, so they couldn't even find comps. Like the single families were selling for like 490 in the neighborhood. Uh, and so, but this was a smaller house than everything else that was selling. It was kind of the worst house in the best, like a really good street.
Mhm.
And so I told my partner, I was like, let's hit them with a really low number, see how they react, because interest rates just went up. So we told our realtor, we were like, hey, let's hit them with 370. And they're like, dude, I'm not gonna put in that offer for you. Like
Mhm.
that
Mhm.
just you're literally spitting on their face.
Mhm.
I was like, put it in. Interest rates are up. We put in the offer, and there was like 20 people that viewed this place. Um, like, and no one put in a good offer. So the seller actually accepts our offer. So we're like,
Not
what
even
the
a
hell
counter.
what is wrong with this place?
Yeah, what is wrong with that realtor?
Yeah, I was like, what's
On the
wrong with
selling side, not yours.
yeah. They accepted. I'm like, okay. We're like, okay, this place is probably gonna fall apart. Like the foundation is probably screwed. Like we're like thinking about all the worst case scenario. Home inspector goes
Throw
in,
up. Someone
contractors go
died in
in,
it.
yeah, and they tell us place is really clean. And I was like, what is going on here?
Yeah.
So
Yeah.
we close it, and we've had it for about a month now, and it's a great property. Yeah. That one we're actually like, there's a person that reached out to us that does Airbnb arbitrage, and he's
Mm-hmm.
like, hey man, like if you let me Airbnb arbitrage, I'll pay premium for this. And I was like,
Mm-hmm.
oh great, we don't have to pay for property management, and you'll
All
manage
right.
all of it. You'll be a great tenant. Okay, sure.
Someone in Edmonton or someone?
Yeah, in Edmonton.
Okay. Okay.
Yeah, because
Cool. Keep me
the
posted how
key
it goes.
yeah, the key thing for me in Edmonton was building relationships. So I built relationships with a lot of people that just did a lot of things in Edmonton in
That's
real estate.
cool.
Yeah.
I just met a gentleman on the weekend who has 100 Airbnbs, doesn't own any of the properties, so same business model, and
Yeah.
he's doing extremely well. So I hope to have him on the podcast soon.
Yeah.
Yeah, he's out of Nova Scotia.
Oh,
Um,
nice.
but yeah,
That's
like
the strategy that everyone's flocking towards now.
I know, but
Airbnb
all these
arbitrage.
municipalities are cracking down. It's,
Yeah. But the thing is, we have to keep in mind, it's like once everyone flocks to one market or one strategy,
yeah,
like
and
it compresses margins and profitability goes down.
yeah, because I posted about it on Facebook yesterday. Someone says I do middle term rentals, and I'm like, and you're gonna have a whole bunch of competition soon,
Yeah.
because all the short terms being regulated out.
Yeah. Yeah.
Right. So, like you said, you take away one thing, you can't do. So this specifically, this was London, Ontario. You can't do under 30 days now. So
Yeah.
now the market for over 30-day rentals is gonna go up. The
Yeah.
supply of.
It was crazy. It was just like, even for me, it was just like people entering markets. I was started investing in Cambridge and Kitchener. No one was there. Like you could pick up things. And then I was just like, okay, now it's really hot. So then I was like, okay, I'll go to Brantford now. And then I bought in Brantford. Then people started flooding that market.
Yeah, yeah,
Then I
yeah,
went to London, Ontario, and I was
yeah.
like, okay, that. And then I started going to Windsor, and I was like, I don't believe in the fundamentals here. And then I just couldn't, and I flew over to Alberta instead.
All right. So you're a smart guy. What do you like about Alberta and Edmonton, economic fundamental wise?
Well, the thing is, if I told you that Edmonton and Toronto had the same average house price at one point, would you believe me?
At one point, I don't even know what year. What year? What year we're talking? 1960?
2008.
What?
Yeah. So they had the same house price,
No
Edmonton and
way.
the
Must have been a
GTA.
statistical blip somehow.
Yeah. So what happened was Edmonton stayed stagnant, but the GTA went up 3x.
hmm
So I was like, okay, something's not adding up here. Um, so then I knew why that was because of oil and gas. So I was talking to a lot of my oil and gas friends in the finance industry, and they were saying that oil and gas is going to be is people are underestimating it. Like people are still going to use oil and gas because demand is going up every year. So I was like, okay, Alberta, there should be a good play here. And then I was also looking at incomes. So Alberta actually has the highest income out of any province in Canada. So I was like, okay, well, you have high income here, and then the prospect is really high. And then also what you're getting is housing affordability. Everyone's
hmm
actually moving over to Alberta because they're the top growth province
hmm
because the housing is affordable.
hmm
And they're starting to diversify away to renewable energies and also tech. So I was like, okay, well, they're not only reliant on oil and gas anymore because they've been burnt so many times. Why Edmonton is because the people think that Calgary is actually the capital city of Alberta, but it's actually Edmonton. So there's a lot of government employers there. And so even when things dip on oil and gas,
hmm
Edmonton is the fastest city in Alberta to actually recover. So I was like, this is very, very solid. And then I went there and I was just like, hey, this is a really good market. And
hmm
when I went there, I flew out there last year. and I bought a duplex there because I wanted to test the market to see if my thinking was right. It was a very scary time because no one was there. Like there was no one that was buying there. Maybe Calgary, but not Edmonton. And so I was like, okay, things make sense, but maybe I'm wrong somewhere. So I bought that property, held it. And then the reason why I flew out was because people started to, like, things started to go up again. Like, things started to go up. And when I was there, every week, like, the market would be shifting upwards. Right now, Edmonton and Alberta, they're holding strong for their thing. So year over year sales activity is up like 3%, whereas the rest of Canada in May is like down like 22%, and in the GTA it's actually down, I think 70% or 60%.
Fascinating. So would you ever move out there to live?
Honestly,
Edmonton?
like I do that.
I heard the winters are great.
Yeah, the winters are not great. I wouldn't
because before we were recording, your work is virtual. Your work allows you to be anywhere, right?
Yeah, so it's virtual right now, and they have hired people from Alberta because there's a lot of tech talent there. So for me, it's just like I would live in Calgary. Like, that's beautiful over there, even though they have some harsh winters.
Right.
Edmonton is like it's like a London, Ontario, but just bigger. So
right. Colder, I imagine. We don't have to plug in cars. I went to school in London, so we didn't plug in cars.
Yeah.
Winter.
Yeah, they actually have pickaxes to get rid of the ice over there on their cars.
I'm not touching my car with a pickaxe. So yeah, are you? Is that something you're considering as well? Moving out to Alberta, Calgary?
So for me, like my family is all in Ontario, so I one of the key things is I want to be there for my family and stuff. So I'd never actually move over to Alberta,
right.
Unless I can move all of them out there. But for me, I've built enough relationships and power team that I can manage from a distance.
Got it.
Yeah.
Fantastic. Because I hear about people moving to Alberta, but I don't know anyone personally because the weather's harsh. The winters are harsh.
Yeah. Well, the U-Haul stat is in 2021. It showed that Alberta had the highest one-way destination moves. Yeah.
Fascinating.
And yeah, it's crazy. So there's a lot of inflow of people over there. Yeah.
I will just, I don't know, but when I hear U-Haul, then I think do-it-yourselfers. So then that means if it's a do-it-yourselfer, no different than a do-it-yourself renovation, that these are people generally on the lower scale of income, disposable income, right? So that's who I imagine going out there. I'm completely open to seeing other data to tell me that there's high income people moving out there.
Yeah.
And I also wonder where immigrants are going. Will immigrants from China and India, which tend to be our main sources of immigrants, will they go to Alberta?
You know what? And U-Haul is like the people I've seen that are using U-Haul is just people that don't trust movers. And the moving industry is really thing. So, but it's a lot of people that just do a U-Haul truck. It's not lower income people. It's just like they're actually more sophisticated than people that actually hire cars because they want the control for themselves. They don't want they want to manage the movers that put their things into the truck, and they want to move things properly. Right. That's what I see. But you might be right that there's a certain cohort that does do that.
You're young though. Wait till you're over 30 and see how your friends move.
That's true.
I don't think any of my friends use U-Hauls. They all use hired movers.
Yeah, probably like premium people like to move as well. But
it's just because we're old. We don't want to lift shit.
Just hire me. I'll come over.
You're not young hustlers like you who run marathons for fun.
Yeah, we'll be like, oh, it's a good workout. Just give us some pizza and some beer.
Yeah. That doesn't convince me to do anything. Pizza and beer. It's like you have to pay me to eat pizza and beer.
Yeah. I don't know
I've had the benefit of being in the market a long time. So. Antonio, thanks so much for doing this. Any final thoughts you want to leave the listener with?
I think the final thought is there's two things where I live my life is just like be kind to others don't be a jerk, and just work really, really hard to get good results. So that's one of the things. The second thing is always be questioning everything and figure out the truth for yourself, because the truth is sometimes hard, but it will lead you to the optimal solution.
I noticed that. I noticed that in what you shared is that you ask a lot of questions, and I wish a lot more people ask questions, because I feel a lot of the people who didn't ask questions are the people that are hurting right now in anything, crypto, stock, condos, pre-con, anything. They didn't ask enough questions. They didn't ask questions like, what happens if the market falls apart?
Yeah.
What happens if I have to assume ownership of this property and run it myself?
Yeah.
Right. Then and a lot of those people are having challenges these days. So yes, wonderful advice. I naturally am inquisitive, not as inquisitive as you, but it's kept me out of a lot of trouble. Thank you, Antonio, again for doing this. Oh, and then you have a Facebook as well. How do you say this? Malabar Properties Co. Did I say that right?
Yeah, you did. Malabar is the money tree.
Oh.
Yeah.
Malabar Properties on Facebook. They search and find it, and a Young Money _ on Instagram.
Yeah.
Antonio, thank you again for doing this. Congratulations on all your young success. I have a feeling you're going to be very successful in life, and good luck with REIT.
Yeah. Thank you so much for having me on, Aaron. I'm a big fan of your podcast, and this is one of the things that I definitely wanted to cross off my bucket list, to actually be one of the ones that are speaking on it. So thank you.
Thank you. Thank you for listening. Thank you for watching. If you want to learn how to invest in real estate from scratch, my team teaches beginners how to use the #1 investment strategy that I personally use in a virtual free training class every month. Go to investortraining.ca/YouTube to register for our next class. The link is also in the description as well. I publish at least 2 to 3 videos a week here, so subscribe if you want to keep learning from seasoned investors like myself and my guests. And if you're just starting out, feel free to ask questions and comment below, and I do the best to answer each of those comments and questions myself. Again, if you're ready to learn the nitty-gritty about real estate investing from a professional investor, register for our next virtual class. That's at investortraining.ca/YouTube. Thanks again for watching. See you in the next video.